Most service founders spend years working with an accountant and never once ask whether the relationship is actually working. The books are clean, taxes are filed, so the assumption is that everything's fine. Clean books and filed taxes are the minimum. They're not the goal. And for most founders, the relationship stopped at the minimum a long time ago. This video is about how to know if yours has too. I'm Phillip. I help service founders read their numbers. Compliance versus clarity. Compliance is what most accounting relationships deliver. Accurate records, reconciled books, tax returns filed on time. It's essential, and it's the floor, not the ceiling. Clarity means when you have a financial question that actually matters. Can I afford to hire someone? What does my cash look like in 90 days? Which service is actually making me money? You have someone who can answer it from actual numbers. Most accountants are trained for compliance. Very few are built for clarity, and most founders do not realize there's a difference until they've been in the wrong relationship for years. 5 questions to ask right now. 1. Can you tell me your net profit margin by service line? If the answer is a version of that's more of a business question, you're getting compliance and nothing more, because a real financial partner knows which of your services is actually making you money and which is quietly draining your margin. 2. What will my tax liability look like at the end of the year? A real financial partner can give you a realistic estimate in October, so April is never a surprise. And if that conversation has never happened, the relationship is reactive by design. 3. Can I afford to hire someone right now? A compliance accountant will tell you that's really more of a business decision. A financial partner pulls up your cash position and gives you an actual answer based on your numbers. 4. What does my cash look like in 90 days? If the answer involves pulling up last month's P&L, what you're looking at is a report, and it's not a forecast. And those are 2 very different things. 5. When can I pay myself more? What you should be hearing back is a specific number tied to a model that shows the revenue needed to support an increase, not a feeling and not when things stabilize. Let's talk about some red flags. You only hear from them at tax time. Monthly contact, even brief, is a baseline for a real relationship. You do not understand your own reports. If they come in every month and you file them away without fully understanding them, that's a communication problem on their side. Every major decision still feels like guesswork. If you have been working together for over a year and you're still making decisions from your gut feel, something is missing. What the relationship should actually look like. Monthly contact where someone reviews what happened and tells you what it means. Forward visibility into cash 90 days out. Questions answered in the language of decisions, not accounting. And someone to call when a real decision comes up. This is a financial partnership, and it's more available than most founders think. Go back to the 5 questions. If you could answer all of them confidently, the relationship's working. And if any made you pause, that's your starting point. Subscribe for more on what financial leadership looks like for a service business. And if you want to explore what this relationship looks like for your situation, the link below is where to start.